Welcome back to Fin Talk with Anil. We are on the day 8 of 30 days, 30 financial topics, and today we are going to discuss do's and don'ts of a credit card usage, a guide to smart credit card management. In let's do some pretext. Nowadays, everybody out there has a credit card or want to have a credit card, or it's companies or the banks are so eager to give you a credit card that you ever wondered, or I'm sure you have wondered, how the credit card companies make money if they give you cards free of charge, or a 40 days credit period, or so many bonus points and all. So let's understand how the mistakes you do are going to cost you. Which in turn is the return for the credit cards, yeah, or the credit card issuers, yeah. So a study says, if you are making a minimum payment, you might have noticed on your statement that the minimum total amount due and a minimum amount due. And if you choose to make that minimum payment in this particular example, which is a 2%, let us say you have made a purchase of 3,000, and which carries an interest rate of 20%, being moderate, and even if you make a 2% minimum payment at the end of the month, so by the time you pay off that 3,000, that's gonna take you a whopping 9 years and 1 month, and you will end up paying double the amount of what you have borrowed. If you borrowed 3,000, by the time you pay it back, you will end up pay 6,500. So I just wonder, like, who keeps that long? But then it kind of brought a curiosity in me to find out how the interest works in credit card, right? So let us see how the interest thing works in a credit card, and uh, then understand some essential do's and don'ts of the credit card. Yeah, the credit card interest usually calculated by taking out the number of days the amount was outstanding, multiplied by the outstanding amount into the rate per day. So the rate you have per annum would further be bifurcated, or multiplied by 12 and divided by 365 to get a per day rate. So let us better understand by taking an example. Okay, how does credit card interest work, right? Let us take an example and understand. So let us say you have done a transaction on 2nd of December 2021. We are way beyond, but let us stick there. And the amount was 11,000, right? So the statement which came on 7th of December, let us say on 2nd December you did the transaction, on 7th December you got the statement, and the minimum payment, which is in this case 5%, is 550 rupees. So in total due is 11,000. These are the things you have noticed, and the due date of that bill is 27th of December, right? Which carries an interest rate of 42%. So let us take some particular examples. Like in case one, let us see, if you make the full payment. This is like the best thing you can do when you're dealing with the credit cards. You make the full payment, which is in our case 10,000 or 11,000, which you complete it, and you are going to get no charges. You don't need to pay any charges. You don't need to pay any interest. In return, you will even get some bonus points which you can use later for doing some purchases or redeem them for cash. Yeah. So let's move on and see a different scenario, case two, where you do a partial payment before the due date. Yeah. So let us say you have decided to make some payment. You don't have the full amount. You mind this same example would also applicable to where you decide to make the minimum payment also. Yeah. So let us say you have decided to make a 5,500, which is typically 50% of the total bill on 22nd of December, and you think this is going to cover you, right? So let us see in that case what is going to happen is now the interest on from the 28th day or 29th day, usually nobody tells you that there is a 3 days grace period for the payment, but not for the bill. Yeah. So the if you have missed to pay till 30th, like you have no intention, you paid on 22nd and you're just relaxed that you're not going to pay anymore. So from the 28th day onwards, so uh, I say the calculation would go this way. From the 28th day, they will charge you interest. Now, the interest will be calculated. This is the interesting part. The interest will be calculated from the date of transaction, which is in our case the 2nd of December on the full amount till the date you have made the payment, which is 22nd of December. That would at the rate of 42%, basing on the calculations what we did earlier, right? So like 21 days into 11,000 into 42% divided by 365 days, which is per day interest, right? So you will end up paying rupees. Okay. Now you will for the rest of the amount, which is like the 5,500 is covered. Now you have another 5,500 which is balance. That is going to be charged. Let us say you make the balance payment on 7th of Jan. For this example, let us take it this way that you paid the balance. There is no way to calculate if you never pay it, right? So let us say in our example, you pay it on the 7th of Jan. So the 5,500 starting from the 22nd of December until 22nd of December, it is already calculated. From there, 7th December is like 8 plus 7 is about 15 days. Your interest going to be calculated for at the rate of 42%. So you will end up paying a total interest of 360 rupees on the total outstanding of 11,000 for this delay of which is in our case you should be paying it on 7th, but you get an extension which you shouldn't be using. But let us say if you have to pay it on 27th, but you paid days for 10 days, you are paying a 360 rupees interest. Yeah, I hope that makes sense. Let us move on and see for case 3 in our case if you decide to make a partial payment after the due date, right? If you have decided to make a payment of 5,500, which is after the due date, which is 29th of December, the due date was on 27th of December. Let us see how the interest has been calculated. Yeah, this is going to be the same way. So the interest would be calculated from the date of transaction, which is on 2nd December, till the 29th of December, which is in this case comes to 28 days at the 42%. Yeah. And then the balance, let us say you have made the balance payment on 7th Jan. So the balance payment would be calculated from the 30th till 7th, where you finally make the payment at the rate of 42%. So in this scenario, you are going to end up paying rupees 405 for the extra days you took, in this case 10 days. Yeah. So let us see, sometimes we know some people take for granted the credit cards, and they use it for withdrawing the cash, or there is an option in the credit cards for withdrawing the cash. I'm going to tell you why you shouldn't be doing that. So the entire concept of credit card is to take the advantage of the credit period which you're going to get free of cost, right? If you're not able to do that, then I don't know why you even need the credit cards. Of course, if you are in a dire need, which is like a life or death case, yeah, definitely, why not? But then let us understand how the interest has been calculated when it comes to withdrawals. So let us say if you have withdrew the money of 10,000 rupees on 2nd of December, right? Let us say now, mm, and you made the payment within just 3 days or 4 days. In our case, 4 days, which is on 5th of December. So you took the amount on 10th of December, which you paid it on 5th of December. But remember, the statement date is 12th of December, and then you have to pay the bill on 27th of December, etc., etc., and all. But then understand, in this case, even after you paid it within 4 days, in our case, let us take it as a 4 days. Otherwise, if you want to pay it along with the, you know, bill date, which is 27th, then remember, you are not given the advantage of that free credit period, and you are liable to pay 42% per annum interest for each day the amount is outstanding out there, right? So in our case here, for 4 days, you have to end up pay 46.03 rupees interest, right? So I hope that makes sense now. Okay, that has been said. Let us see some do's and don'ts for the credit card. So let's start with the do's. So taking out from our example, pay your bills on time, keep track of your spending. If you're someone who doesn't want to be in liability, then make sure that you are going to have that kind of amount in your bank before you spend. So understand your interest rates. So don't just uh, turn a blind eye on the interest rate. Better to, for the even if you are someone who pays the credit card bill on time, but there could be days or times, sometimes you just forget, sometimes the bad time wouldn't let you pay. So it is also important how much the credit card percentage is, and use the rewards wisely. There would be you make a good amount of rewards, or some credit card rewards just expire by within from months. So have an eye on them, use them before they expire. If you have a credit card which doesn't usually expire, then yeah, why not, right? So maintain a low credit utilization rate. So it is also important, if you let us say have a credit card with a limit of 2 lakhs, then it is very important that you make a credit utilization of less than 30%, which in our case 60,000. So if you're someone who is like uh, this is like a mandate. If your credit utilization goes up, then it's going to spoil your credit score drastically. Yeah. So make note of that, and it is also a very good habit of reviewing your statements regularly for those kind of charges, interest, or any uh, items which you don't want to be billed for you. Yeah. So that is a good idea. Now let us see into what you shouldn't be, or don'ts of a credit card is, of course, the first and foremost is don't miss the payments, avoid maxing out your card, like not use up to a limit more than 30%. Don't ignore the fees and charges. Like if you notice any fees and charges, you're going to pay for it, right? Of course, you are the one who's paying it. So raise your concern, ask for them. Sometimes you can just request the credit card providers to waive off the charges for you, right? So, and it is also not a very good idea if you are someone who's applying too many credit cards at once, because with every credit card opening in your account, it is going to have an adverse effect on your credit score. One or two within a couple of months, or in a quarter should be fine, but if you're doing it more, then yeah, it's going to affect it more. So, and also it is important to avoid making minimum payments. We have understood in our example that how this is going to affect you. It's not a very sustainable way of using credit cards. It's the best way to clear off all the payment on or before the due date, to better use or take the full advantage of the credit cards. Yeah, and of course, never share your card details to anyone to escape or stay safe from fraudsters or mistaken. So let us see some key takeaways from our discussion, which is like making full payment by the due date to avoid interest charges. Partial payments before the due date reduce interest, but partial payments after the due date incur additional fees of interest because it will not the days are going to add on. And further, cash withdrawals incur interest from the date of withdrawal, and you will not get the advantage of free credit period. Understanding the credit card interest calculations can help you manage debt and avoid extra costs. So that being said, thank you very much for patiently watching till the end. Show me some love. Tell me how do you like it and what do you want to know more or know next. And thank you so much. Hit that subscribe button. See you all. Bye bye.